Good morning. Trying to make sure that this will record in HD. For some reason, it's not uploading in HD to YouTube, but I don't have much time to worry about that. So, you know, post FOMC, right? Where are we at now? Nothing's really changed for me as opposed to what I talked about on Sunday, as far as looking for certain things to actually tell me that there's change or confirm there's change rather than sitting here and acting like there is change. Do I think that there's still potential for downside? Of course I do. On the daily here, you're clearly coming up, and we're now testing the backside of the 50-day moving average. So the 50-day moving average has worked as support, obviously, quite a bit. So the first action that would need to take place for me on the day time frame, which would carry over into your weekly and monthly, which I don't even pay attention to weekly and monthlies anymore. I think they're just noise at this point, especially in this type of market. But the fact is, for me, the first thing I need to see change is I need to see a seller actually sell, the backside of the 50 day moving average. So as we rally up into here to see if we're going to break through and potentially go higher, I need to see a seller step in here somewhere in the 44, 10 to 44, 40 area, somewhere in that range. There has to be a seller that steps in for me. If there's no seller that steps in, just expect to see the same thing we've seen over and over again. Like I've said before, it's not the first time we've been below the 50-day moving average. We've clearly gone below it, and we've clearly found support at some point and then rallied off of that. For me, until they find an actual seller below the 50-day moving average on the daily, I refuse to believe that there's any kind of change taking place in this market at all. Now, if that does take place, well, then guess what? It changes things a little bit, and we start looking for, maybe potentially being on the short side of the market far more often than being on the long side, which would be the change of the market. Taking a look at what happened in FOMC. Now, FOMC, after the announcement, whatever they said, that, jibber jabber, whatever, it's the Fed, right? They just make it up as they go, it seems like. But either way, it didn't cause any reaction. Nobody won. Their sellers didn't take control. Buyers didn't take control. It literally just fully balanced, for the remainder of the day after the announcement. Now, what you have in Globex is you have another continuation or attempted continuation higher to try and get us through this support that we talked about on Sunday, which we were looking to see if they would change this into resistance, especially try and protect what was, a sizable gap. Now, Globex is trying to gap you above that. So what do I want to look for? Well, any rotation in the market that moves into and just below the 4,400 number to that 4,392 area, that's where I want to do my business on the long side, as long as that's what I'm seeing. As long as I'm seeing the buyers are coming in more aggressively again, similar to what we've seen, the past several months, that wants to keep me still on the buy side till at least up somewhere here, 78.70. But more importantly, knowing those moving averages on the daily, somewhere in that 40 area, I need to see a seller really start to jump on this and get aggressive. First and foremost, early on in the day today, you'll see it's very similar Globex over and over again, right? They're very, very common in how they're trading right now. You can see there's a separation here, right? There's clearly a seller here early, and then that turns into a buyer here late, right? And then you found that same buyer in yesterday's open. Similar idea here. You can clearly see in the Globex session where the sellers tried to sell the market, which is right here in the middle, just above 4,400, surprise, surprise. And now where the buyers effectively have tried to step in and buy the market. So that is your early clue in the market. Any open and liquidation into this, what was, an attempt to turn this into resistance. Any move into the central side of that, which happens to sit on a big number like 4,400, is, an area you want to monitor very early in the market to see if a buyer is going to step in, a very mechanical buyer in nature. And if they buy it and they continue to move the market higher, well, guess what? You ain't seeing change. There's no change in the market. You need to see a seller come into this market and want to sell it. And as it stands right now, I just don't think we're seeing that in the ES. So for me on the ES, like I said, I'm just trading rotations anyways. But if we do break into, this 4,400, 4,394 area and find a buyer again, I want to be long the rotation to the upside, targeting the 44.40 area. And if it blows through 44.40, well, guess what? We'll be right back up here in the 70, 78 area before you know it. So That's where I'm looking at in the ES. Now, when I take a look at the Russell, I do believe still, and I've been saying this since Sunday, I think the Russell is the best trading market right now by far. I don't even think it's even close. I think the Russell is behaving the best. It's not as sporadic, and it's giving really, really good opportunities because guess what? We talked on Sunday about this being a strong balance range. Now, this is the only market where we have gone from natural trend into natural balance. And now we're looking to either continue the trend or looking to potentially start a counter trend. Until a buyer breaks above the upside of this balance or a seller sells below the downside of this balance, trade it as balance. Just trade the edges back and forth, back and forth. I mean, look how often it's happened. And it's given really, really great opportunities to make money. And that is the name of the game. Nobody cares about, if I say this is what's going to happen and it happens if they don't make money on it. It's a waste of time. Just come into the market with your plan, extract the money, and move on. Looking at R2Y, this is the balance range. We now came right down towards the low side of it. We've bounced right back up to the mid, where again, we drew this box together on Sunday where you can clearly see this is an area of attention. And this is where the market likes to pull itself back to from the edges before deciding if it's going to make a reattempt at the low in this case, or continue back up to the high side. So where R2I is right now could potentially cause danger in trading just because it could be a little bit more choppy. But direction-wise, if the buyers pop this above this central side pretty quickly, you can see they're already getting back above their moving averages. If they pop above this very quickly, you got to be looking to get long to potentially target the 2300 retest, and far more 2320 as being the ultimate target. If the sellers do come in and sell this, again, you're going to be targeting 2140. So very good market to be trading right now. It's by far my favorite market. I've been trading it far more than the others, just because of where it is on the day time frame, and the fact that I think it's behaving very, very, very well. Looking at the profiles, we talked about all this stuff Sunday. Nothing is, when I do the profile series, the number one thing I talk about is managing your expectations. If you manage your expectations correctly, you will never be surprised with what the market does. Now, don't get me wrong. I should say never. I hate saying never, but it's a word that I use often for some reason. But what I'm saying is when the market does do something that's within your expectations, it doesn't catch you off guard. You're prepared to trade it. You plan for it, and you can effectively execute. Now, keep in mind, there's going to be crazy things that happen, and you're just like, whoa, what was that, right? That's trading. That's part of being in this wild market. But nonetheless, we look below what was a supportive area. They trapped. They tried again. They trapped again. Next thing you know, we're in the central of it. Keep in mind, if you were to look at that daily again and you look at this upside and this downside, guess what? You're right in the middle of balance. You're right in the middle of a very broad daily balance. So choppiness is to be expected. Now, if the buyers cannot push this above that 2256 area and really rally this, you should, and possibly, my plan at least, is to look to fade that rotation either back into the middle side of this, the 2200 area, or right down to the bottom side of the 2174 area, which should work as support. This should work as resistance up here. This 2245 to 2257, that should be early resistance. So if we open, rally into here and a seller steps in, guess what? Step on the gas, be on the short side, and just let the market get you your payday. As far as Globex goes, you're going to notice one common theme is I will not talk about gaps when you're gapping within balance. I just do not think they're valid. I think they're a complete waste of time to spend any kind of focus on. Gapping outside of balance, far more valid than gapping inside balance, back and forth, back and forth, back and forth, right? Because you're naturally still in balance. So if we do gap, I don't care. It means nothing to me. Far more importantly is how we respond up here in the 45 area to the 57 area. And likewise, another thing you want to look for is that early push back down into where you can clearly see the buyers bought it up and seller tried. And guess what? Guess who's trying to find the support there? And if that fails, your next major area of support is against yesterday's IB high. And it's not just because it's the IB high. I do not use IB that much in trading, but it's more because that was a clear area of support late in the day, even when they started to balance out post FOMC. So that's where I'm at with R2Y coming into today. Now, last but not least, the old NQ. What we talked on Sunday, and I really wanted to get that out on Sunday, that video, because I just thought there was too much talk about change. There's too much being put on it. And it's not that I don't think there could be change in the market. It's that there was nothing that told me change had already occurred. And that's the biggest thing. So when we built these balance areas, and we talked about this balance area being, kind of the area where maybe, those Momo buyers, those laggard buyers, they got really aggressive off that 50-day moving average and really bought it. Remember, these are the buyers that missed every other opportunity, and this is the last one they caught. And they're going to get themselves in trouble far quicker than, smart money, obviously, and even, better traders. So what I look at this as of now, again, there could be change. We could see it coming. It's just not my place or my position to say that change has occurred yet. I just don't see it. But what would need to happen overall in the day time frame is you need to sell below the 14800 number. You would have to find a natural seller below that 800 number for me to believe that reattempting down here at the 13800 area is a potential target. So for right now, I'm just looking at this like these laggards were flushed out. This is a hard flush here, came right down to the balance area low. So did you say change? Not really. All you saw was the buyers up here get trapped. They pulled it back into what was balance, which was support. They found support on the low side of balance. Again, what is expected in balance? Go from the top of balance to the low side of balance. See if you find a buyer. If you find a buyer, go back to the top of balance. Very simple concept, right? So that's what you've done so far in NQ. Now, one thing I am, somewhat interested in is sometimes when you get any kind of liquidation in the market or you get a stronger liquidation, almost always you will find some sort of balance prior to it. So as it stands right now, we've flushed and then they found a couple days of balance. This third day is trying to look actually above, potentially our sell day. If this comes back down, you could just be seeing short-term balance, which again sets it up a little bit better if we are looking for. Again, here's short-term balance, right? Remember back in here before March, short-term balance, and then, the hard flush happens. So same concept. You're always monitoring the market from trend to balance, and that's just what I'll continue to do. I haven't traded much of NQ, mainly just because I've been so focused on RTY, and I feel RTY just works so well over the last little bit here that it's just been really, really hard for me to get too focused on anything else. But that being said, we're in very, very, interesting areas, all areas that we talked about on Sunday. Again, levels are levels. It's not rocket science. Just because, sometimes these levels work well. You found support exactly where we thought we'd find support. Like, don't pat yourself on the back for that. Who cares? If you didn't trade it or you didn't execute it, who cares? That's one of my biggest pet peeves about levels is it's not rocket science. It's very easy to do. People are just too lazy to put the work in and be able to actually do it. But keep in mind, if you cannot find a buyer again, similar to ES, you can't find a buyer again above that, I have a 269 area to 285, 87 area. If you can't find a natural buyer, which they weren't able to do in the Globex session, if you can't find a buyer to push you above here, any open and push into here that finds a seller similar to RTY is a fadeable move. It gives you a clear indication and a clear stop being Globex is high. Or maybe you have a different stop somewhere up in this range, which is fine. But it gives you a clear indication. If you push up into here early, a seller steps into the market and starts to push back, you need to be or want to be, in my opinion, on the short side. I want to be at least. Likewise, very clear indication on where the buying is taking place. Sellers pushed up into here. X and A period. What happened? They failed. K period. What happened? They failed. L period tried to push through. They're still getting pushed back. And finally, you got the blow through an M. And look what happens in V period. You come right back down, right to where, previous resistance was. It turned into support, and now they're balancing at the high here. So early on, if you sell off somewhere into this range, you sell off somewhere in the 220 area, the 230 area, somewhere in that range, and you find a buyer, well, guess what I want to do? Potentially be on the long side of that rotation to come and retest up here in the 72, 85 area. But keep in mind, NQ I'm not super focused on right now. RTY is my go-to. I think RTY is by far the best market to be trading right now. And to be honest with you, the second best market to trade right now is the Dow. I put NQ and ES, at the back of the bus. They're just a little overcrowded for me right now. There's too many eyes, too much in there. I'd far rather trade RTY and the Dow right now over the other two. So that's where I'm at coming in today. A little Thursday update. Obviously, FOMC is over. If you read FOMC, go ahead. I wouldn't let that cloud your judgment on what's taking place. And if you're a day time frame trader, just trade what's in front of you and live with the results. So as always, make sure you trade your plan. Stay safe, and I will see you guys again.